Welcome to this week's edition of Flashback Friday, your opportunity to get some good review by listening to episodes from the past that Jason has handpicked to help you today in the present and propel you into the future. Enjoy.
This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to Creating Wealth with Jason Hartman. During this program, Jason is going to tell you some really exciting things that you probably haven't thought of before and a new slant on investing. Fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine, self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 11 states and 17 cities. This program will help you follow in Jason's footsteps on the road to financial freedom. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Hello, it's Jason Hartman. Welcome to the Creating Wealth Show. This is episode number 308. Hope you enjoyed the last episode with Jim Rogers and some of the great prior episodes we've had in the last 307 of them. And today we are going to talk with John Rubino, and we're going to talk a little bit about economics. I wanted to sort of put this interview ahead of several others and switch it up because we talked a lot about the Cyprus situation, which is an absolute disaster and a really scary situation, and it really shows how important it is to follow the plan that I have outlined. And really what that plan is, there are many parts to it, of course, but one of the major parts to it is to denominate your assets in things. And one of the things that we've seen about Cyprus is how difficult it is for governments to go after things and how easy it is for them to go after paper or money stored electronically, essentially in banks. And that is a very, very scary situation. Basically, as I've been predicting for many years now, the people in Cyprus, now I didn't predict it in Cyprus, of course, I predicted it in the United States, and that is that the potential for our government to seize retirement accounts and to nationalize them, to, of course, protect us from ourselves and from the ups and downs of markets and so forth. And this happened in Argentina. It's happened in other countries historically. And I think it is a real possibility here in the U.S. So your retirement fund should be self-directed. And when it's self-directed, you can have some of that fund in things. Remember, governments always go for the low-hanging fruit. They look for the easy thing, whatever they can get grab billions or maybe $1 trillion or more dollars in assets and do it through decree, through just changing a law. And all of the rest that follows is electronic or paper, and very simple for them to do this if you have those accounts denominated in dollar savings in banks or in brokerage accounts. Very easy to do. But if it's in things, say you own a bunch of real estate or you have self-directed assets within that retirement account, say you have notes and trust deeds, much, much more complicated to deal with those types of self-directed assets. So that's one part of it. And the other part is denominate your liabilities in debt, in fiat currencies like the dollar, and denominate your assets in things. And, I've said this before. A lot of people say, well, money is not important. You always hear that cry from the poor, right? Or the people who just didn't succeed in life. They always say, oh, money's not important, right? And in a way, they're right, but I'd like to put a new spin on it. Money actually isn't that important. What's important is things, the things it buys. And, for some reason, I just think of the movie Castaway with Tom Hanks. And when he was stranded on that desert island, what he lacked was things. Those things have intrinsic value. Housing is a thing, and it's made of things. It's made of commodities that are traded globally and have intrinsic value regardless of a specific currency. They have intrinsic value. Now, our guest today is a gold bug. I asked him that before we started the interview, if he could be considered a gold bug, and he said yes. And I just want to remind you of my take on this. I know we've discussed it so many times before in the last 307 episodes of the show and on my other shows as well. And gold and silver, they are a defensive, not an offensive strategy. They're a way to save, but not a way to invest. And I used to have 5 things I identified that were the flaws in gold and silver. And then I increased it to 7 things, and now I'm up to 8 things. Okay, so I'll just remind you, before we jump into this, we've got this guest is great. He's really, really knowledgeable, and I think he has a really balanced view of the whole situation, which you'll hear here in just a moment. But just a reminder on the flaw in the metals. Number 1, no income. And you know what I say, anything without income, without rent or without income, is not an investment. It's just a speculation. And this is why raw land that doesn't produce income is not an investment, in my opinion. It's just a speculative gamble. You're gambling on, will it go up? And that's speculation. Number 2, no financing, no leverage. You have to pay 100% cash for this asset. Number 3, no tax advantages. In fact, it has terrible tax treatment because it's taxed as a collectible, and that is a 28% tax rate, to my knowledge, and that's just for the federal. That doesn't include any state tax you might have to pay when you sell it. So here you could be looking at a liability of around 40% of your gain. You know, you can't do a 1031 tax-deferred exchange like you can on a piece of income property. Again, no tax benefits whatsoever, and certainly no depreciation tax benefit while you own it, which is the holy grail of tax write-offs. And taxes are the single largest expense in any of our lives, and income property is the most tax-favored asset in America. Number 4, subject to confiscation. Oh, the cry, they say. That would never happen in a country like the United States. It already did happen in the 30s. Gold was confiscated from people, and it was confiscated based on a price of, I think, memory serves me correctly, of $21 per ounce back in the 30s. And then instantly, when the government grabbed the gold from the population, from us, from the citizens, it instantly recast the price of that gold to $35 an ounce. I mean, just a complete scam at every level. So it's subject to confiscation. Number 5, high transfer cost and questionable liquidity. Now, this is one of the things the gold bugs love to brag about, is the liquidity of the asset. But they don't really tell you about the transfer costs most of the time. When you buy gold or silver, you pay a premium above the spot price. And so, you know, you might pay a premium of, say, $100 per ounce for an ounce of gold. It might even be higher. It might be $150 per ounce. It depends how things are going at the time. These premiums, just like the prices of the metal, fluctuate. And a lot of gold dealers say, well, they'll buy your gold back from you if you buy it from them.
Welcome to this week's edition of Flashback Friday, your opportunity to get some good review by listening to episodes from the past that Jason has handpicked to help you today in the present and propel you into the future. Enjoy.
Well, maybe they will. Sure, they probably will if they're still in business. But the question is, at what price? At what price will they buy it? Okay, and they charge you a premium, or you get paid a discounted price when you sell it to them, yet you pay the spot price plus a premium when you buy it. All in all, I did some calculations on this a while ago, on this premium to get in and out of the investment or in and out of the asset, and it amounted to about 8 to 12%. You pay a couple percent on the way in, you pay a few percent on the way out, 8 to 12%. So that liquidity is a little more questionable than I think most people would have you believe. Number 6, remember, these metals, gold and silver, especially the monetary type metals, are competition for central bankers. And they want you to deal in their fiat currency, their dollar, or whatever the currency is that they're recommending, if you will. So this represents competition to them, and they like to manipulate the prices. And if you look at the GATA, the Gold Antitrust Action Committee website, they'll show you how central banks and governments around the world have been manipulating gold prices. And that's fine. It's not fair. It's wrong. Absolutely. But the question is, can it be stopped? Can you ever stop these incredibly powerful interests, more powerful than probably any government on earth at the end of the day? They say that the Rothschild family, I recently saw a piece about this, the Rothschild family that is behind, many people think, but nobody knows for sure because it's like part of the the New World Order secret society. But the Rothschild family, this big banking family, look them up, do some research on them, it's quite interesting, is worth potentially get this, I was shocked when I read this, $230 trillion. And you thought Bill Gates and Warren Buffett, the billionaires, were rich at somewhere around $50 billion, or what is it, Carlos Sims, the Mexican telecom mogul, I think he was up to $80 billion or $70 billion at one point. These people are nobodies in the more secretive world of the Rothschilds and the other people who control central banks around the world at an estimated, and again, nobody knows the number, but an estimated $230 trillion with a T dollars, trillion dollars. Now, just to get some perspective on that, of course, we all know $1 trillion is a lot of money, but with inflation, it ain't what it used to be, right? But the GDP of the U.S. is somewhere around $12 trillion. The GDP of the entire planet Earth in 1 year is around $60 trillion. The Rothschild, and the debt is around $16 trillion now, the U.S. debt. Okay, the entitlement time bomb of what we cannot pay has been estimated to be between $60 and $200 trillion of the U.S. is entitlement obligations, the forward-looking entitlement obligations. And just one major central banking family, the Rothschilds, could potentially be worth $230 trillion. Do you really think you're going to out-manipulate them? They really control the prices of gold and silver, okay, along with J.P. Morgan, of course, and the rest of the Wall Street cartel. Okay, so you don't have control because it's subject to manipulation. Number 7, and this is interesting, one of our clients, Gary, who I've had on the show before, an interesting guy, some of the old shows he's been on, commenting on some of this stuff. But number 7, the interesting question here is, what is the supply? One of the things Gary says is, he said to me when he bought his first piece of income property through us, he said, Jason, I've invested in pretty much everything in my life. I've purchased stocks, bonds, mutual funds. I've purchased ETFs. I've purchased gold and silver and other metals. And I've purchased shares in oil and gas exploration. And I've owned businesses, and I still own businesses. And I've done bank CDs. I've done pretty much everything, okay, in the investment world. But the one thing I do know is that they can always create a new stock. There can be a new initial public offering at any time, and a new stock is created. The supply is not limited. They can always find a new oil field or a new natural gas exploration opportunity. They can always find a new gold mine, a new silver mine, a new platinum or palladium mine. So the supply is not limited. But the one thing and people can always start a new business. All of these investments, there is no limited supply. And remember, the fundamental rule of economics, supply and demand, right? Definitely. But the one thing I know, Gary says, is that all real estate has been discovered. It has been mapped and cataloged, and it has all been discovered. The supply is absolutely finite. It is limited. So, my comment on that, well, that is true. However, there is a lot of real estate in the world, okay? If you've flown over the U.S. anytime recently, you've seen a lot of open space. Now, the question is a question of distribution. Well, is it in a desirable place where people want to live, where businesses want to locate? So that's another question, of course. But when you combine real estate and the favorable elements it has, like the most favored tax treatment in America, it's the most debt-favored asset in America. Housing has absolutely universal need. Everybody on earth needs 3 basic things. Just remember to your psychology class, Maslow's hierarchy of needs. The 3 basic human needs: food, clothing, and shelter. And the shelter is made from commodities. And as the world population increases, and as the middle class grows in size, okay, they say that globalization, for better or worse, there are detractors and proponents of globalization, but for better or worse, it has lifted almost 300 million people around the world out of poverty. And when people are lifted out of poverty, they start consuming more and more stuff. And guess what they start consuming? Concrete, lumber, petroleum products, copper wire, glass, steel, all the ingredients of a house or an apartment complex. So, shelter, shelter, shelter. The question is, what is the supply? That's number 7. And finally, number 8, when you talk to the gold bugs, they say, did the gold go up, or did the dollar, or whatever currency you're referring to that you live your life in? Maybe it's the Australian dollar, or the euro, or the whatever it is, okay? The ruble, I don't know, whatever the currency is, doesn't matter, okay? The Swiss franc, whatever that fiat currency is, the question is, did the dollar go up, or did the currency go up, or did it go down, and was that the reason the price of gold or silver went up? And universally, if you talk to gold bugs, they will always say, the way they always answer that question, is that the currency went down in value. So there again, you have proven my point that this is simply a defensive strategy, is a way to store wealth. It is a way to save money. Fine and dandy, that's great. But then it begs the question, what do we do about investing? We've got to do something offensive. None of us just want to tread water. None of us want to just keep pace. We want to grow. We want to expand. We want to make money. We want to create wealth, as is the title of the show, the Creating Wealth Show. So that's what we want to do. We want to be in the offensive seat. We want to be in the catbird seat. As opportunities come, we want to exploit them. We want to be opportunists. And in my opinion, there is no better way to do this than by owning income property, rental housing. Everything, every factor practically is on your side when you consider all of the multidimensional aspects of an income property investment, where you're not just looking at appreciation or depreciation, but you're looking at cash flow, tax benefits, leverage, inflation-induced debt destruction, multidimensional asset class. So with that, let's get to our guest here. But before we do, just want to mention, we have been having a few website problems, as you know. So if you have any trouble registering for our upcoming Memphis Creating Wealth in Today's Economy Bootcamp and Distressed Property Tour, it's going to be fantastic. It's just a little over a month away now. So get your plans made. Register for that at jasonhartman.com in the events section. If you have any trouble with registration, just give us a call. 714-820-4200. Our web developer promises our websites will be back to 100% by the end of business on Tuesday. So I'm sure hoping that comes true. We've had a few glitches and problems in some of the changeover here. Anyway, let's get to our guest here. Be sure to join us in Memphis. We want to see you there. It'll be a fantastic event. We'll share several meals together, do a lot of networking. You can get a lot of questions answered for me one-on-one, personally, over dinner, over lunch, and the other investment counselors that will be there as well. And you'll have a chance to hear the Creating Wealth in Today's Economy Bootcamp. That's a 9-hour day on Saturday. And then, of course, the property tour the following Sunday. So it'll just be a great time. Early bird pricing is still in effect, but the pricing will be going up in the very near future. We just do that based on the amount of registrations. So get registered, go to jasonhartman.com, and let's go and let's talk to our guest. Oh, and by the way, we've got some other great guests coming up. I wanted to mention, we just did an interview with the chief economist for Trulia. And what's really interesting, just let me take one moment on this. What's really interesting about websites like Trulia, Zillow, Realtor.com is that not only do they have an economics perspective on things, but they also know who's searching for what and what they're searching for, which is an incredibly interesting thing to know. If people are searching in markets like Memphis or Atlanta or Dallas or Houston versus markets like Los Angeles or New York or Miami, okay, or Chicago, the markets that make sense and the price ranges that make sense. So a lot of interesting things we talked about with the chief economist from Trulia. We'll have that show up here in the very near future. And let's go to our guest. We'll be back with him in just a moment.
Jason provides an extremely unique service, Deal Evaluator. Are you interested in a property outside of our network? Need a second opinion? No problem. Let our experts evaluate the deal. Find out more about it at jasonhartman.com.
It's my pleasure to welcome John Rubino to the show. He heads up a website called dollarclaps.com, and I've read some interesting articles there. And he's also co-author with Gold Money's James Turk of the book The Collapse of the Dollar and How to Profit from It, published by Doubleday back in 2007. John, welcome. How are you?
Hi, Jason. Thanks for having me on.
Well, the pleasure is all mine. You're coming to us from, I guess, northern Idaho today, right?
Yes, beautiful, scenic, cold northern Idaho.
Yeah, there you go. But it's a good place to get out of the way of maybe the collapse that is coming.
Yeah, there are an awful lot of Californians moving out here right now.
Yeah. There's a lot of Californians moving everywhere.
Yeah.
I left the Socialist Republic of California almost 2 years ago to move to Phoenix, Arizona. So I consider it to be one of the best decisions of my entire life. So that's.
Oh yeah, this time of year in particular, it's gorgeous down there now, huh?
Yeah. Oh no, it's beautiful here. 8 months of the year, I think we have the best weather around. But those hot 4 months, it's pretty tough then. But hey, let's talk a little bit about your work and what's just going on macroeconomically. Obviously, Cyprus is in the news, and the latest. Just to update our listeners and get your commentary, as of yesterday, they decided, well, maybe we're not going to confiscate people's money in the bank, although there is a bank holiday. So banks are closed, ATMs are closed, people can't do anything. But instead of doing that, maybe we should just nationalize the pension system, something about which I've been predicting in the United States for several years now, going the way of Argentina. The government always picks the low-hanging fruit, and those things are pretty easy to do, especially when that money's not self-directed, when it's in traditional brokerage accounts and bank savings accounts. But your thoughts on Cyprus, and then, I guess you're predicting Italy and Japan are coming right up afterwards, right?
Yeah, what's happening in Cyprus right now is huge. But let me take a brief step back and kind of set the stage for it, because Cyprus is symptomatic of what's going on all around the world. We've spent the last 30 years in the US, Europe, and Japan borrowing more and more money each year and then printing more and more currency to cover our borrowings. So we've ended up with more debt than we can ever hope to pay off, kind of across the board. And because of that, you get country after country blowing up, getting into financial trouble, and it becomes clear to the world that they can't pay their debts and they have to be bailed out in some way. And it was us in 2008 and the Eurozone right after that, and Japan is coming. But right now, the Eurozone still has a lot of stuff going on that is emblematic of the global financial crisis. And the current one is Cyprus, which is it's a pretty little island of like 1 million people. There's no reason we should be paying attention to Cyprus other than as a vacation destination. But what they did was in the last few years is convert themselves into an offshore banking haven. They paid high interest rates on deposits, and they attracted a lot of money from Russia and other places. Ended up with their banks. Oh, and then they took that money and they invested it in Greek bonds. So dumb moves all around, and now they're completely insolvent, and they need a bailout of only like 10 billion euros, which is really a rounding error considering the amount of money that the European governments have been throwing around lately. But nobody's willing to give them that money without strings attached. So what the Europeans have told them they have to do is to go in and confiscate part of each account holder's account in their banks. So they're basically stealing money from people who thought this was just risk-free money, where they were just parking their spare cash in anticipation of doing something with it later. And that is huge, because that's the first overt confiscation of money in the Western world. You see Argentina do things like that once in a while, but usually they're a lot more circumspect. They'll raise taxes, or they inflate their currencies a little bit, which is really theft of everybody's savings, but it's kind of secret. It's not really very clear what's happening to most people. This is just overt theft. And if people draw the correct conclusion from it, which is that none of us are safe anymore. All of our bank accounts, all of our IRAs, all of our 401ks, all of our brokerage accounts are now vulnerable to a government that panics and decides it needs to get money from wherever and just goes in and takes it from financial accounts. Then we're going to come to the conclusion that we shouldn't be leaving our money in financial accounts anymore, and that's going to throw the financial system into absolute chaos. So
see, and that's really the key. The financial accounts, brokerage accounts, bank accounts, anything that's part of the mainstream financial system, that's always the low-hanging fruit. And that's what is really easy for governments to come after. And so I say, look, if you have a retirement plan, an IRA, for example, if that IRA, if it's even self-directed, of course, every year you tell the government the value of the IRA on your tax return, so they know there are assets in there. But if it's self-directed, those assets are a lot harder to get. The assets that are in brokerage accounts, bank accounts, that's just a law. You make a new law, And those assets can be revested in the name of the government for our own protection, of course, because it'll probably come on the heels of some market crash, whether it be engineered as a false flag or something that just happened in the market because the Federal Reserve and Goldman Sachs are the giant bubble machines of the world, and the rest of the system. And so it's just the low-hanging fruit. I mean, it's just really easy to just revest those accounts. It's an electronic transaction. It's just a law that's made, and boom, it's done. Trillions of dollars, potentially.
See, that's what we all have to worry about now, that we wake up on Monday morning and over the weekend, the government has decided to freeze all our accounts. So all of a sudden, we can't get our money anymore. And then once it's frozen, they can do what they want to with it. They can take 10% off the top, or they can force us to convert our high quality equities into treasury bonds or something like that. And there's nothing we can do about it. They've changed the law. They're no longer acting illegally. And we just have to accept it. And so the logical conclusion and to take an even further step back, modern, successful democratic capitalism is based more than anything else on the sanctity of private property and contracts. And if we cannot assume that our property is our own and can't just be taken away by an arbitrary new law being passed, and that contracts are only as good as the government says they are, then there's no real reason to engage in any kind of financial activity that involves contracts or offshore accounts.
And I just say, ask the GM bondholders what they think.
Yes. That was a really important case, but it was obscure. Most people didn't understand it. And even though it was a contract being abrogated, it didn't have much of an impact on public opinion because it was too complicated for the average person to get. But this thing in Cyprus where they're just going in and they're taking 10% off the top of everybody's bank accounts, people get that.
Well, that's what they do. They bury a lot of this stuff in complexity so people don't understand it. But you know what? I don't want to leave that totally alone. Can you just take a moment to touch on the GM thing and explain it and then how they buried it in complexity?
Well, when GM went bankrupt, when a company goes bankrupt in general, that means there's a limited amount of money that has to be divided up between the people that the company owes money to. And they had senior bondholders, people who had lent money to GM by buying GM's bonds with a contractual obligation for GM to pay them back first. They were first in line if GM got into any kind of a trouble. And so those bondholders assumed contractually that they were going to get all their money back no matter what happened. And when GM went bankrupt, the government got involved and said, no, we're going to give money to the unions, to GM's workers, and it's going to come out of the principal of these senior bondholders. So the bondholders had to take a haircut.
Because those bondholders are those evil rich investors, those evil capitalists.
Yeah, and the
Obama fans can't figure out why people hate him.
Yeah, well,
it's shocking.
But I mean, it was politically astute because there are more unionized workers than there are bondholders. So you gain more votes by doing that. Right. But you abrogate a contract, which just reverberates through the rest of the financial system, because now people with money to lend are going to be less likely to lend it, because even if it's a senior bond with nothing above it in the capital structure, it's still not guaranteed. You still might not get your money back if the company runs into trouble, because the government might intervene and abrogate that contract. So that gums up the works. You get a financial system that's less able to provide capital for productive uses. And so you get less growth and more unemployment. So in the end, doing something like what the government did with GM, they thought they were doing it in the interest of workers, but in the end it hurts workers, because now there's less capital available, fewer factories being built, and fewer people being hired.
Right, but you're asking a typical American, a low information voter, to actually look at the big picture. I mean, they just think, what do I get?
Exactly. That's why it's a politically astute move to do something like that. But the long-term consequences are horrendous, because you can't overstress the importance of property rights and the sanctity of contracts in a functioning capitalist economy. You take that away, and we are Argentina or someplace like that, where things just don't get done. And we're on the verge of that now. And people are starting to get it. That's why Cyprus is so important, because it's really not that much more important in the scheme of things than General Motors, but it's understandable.
Yeah, sure. Okay, well, let's go back to Cyprus. So good point. So what else do you want to say about that? Because we kind of changed courses there.
Sure. Well, the thing to watch with Cyprus now is what happens when they try to reopen their banks. They've closed their banks. Nobody can get to the money.
They're gonna have a run, right?
You would think every rational Cypriot is going to show up at their bank on Tuesday morning or Thursday morning or whenever they finally open these banks and take all the euros that they have out immediately. And you would also think that every rational Italian and Spaniard is going to see themselves as next in line for something like this and want to take their money out of their banks. So you have the real potential here for a cascade failure of the peripheral Eurozone banking system, where everybody just pulls their money out just to be safe, just for this week. And all the big banks have no cash left. And so they fail and have to be bailed out by the governments. And, you get this.
And that's exactly what happened in Argentina.
Yes.
Okay. Just not so many years ago. It was pretty recent. And the other thing that happens is this massive crime problem. Now, in Argentina, the capital control they did is they let people pull small amounts of money out of the bank, not large amounts. That was the initial thing, I think. And forgive me if I'm not getting this completely right, because it wasn't that long ago historically, but it was long enough ago in my life to maybe not get it perfectly right. But then you had all of these people working in teams. I remember reading a Wall Street Journal article about it, working in teams to mug people as they were leaving the banks. And so you had one guy at the building across the street with binoculars. They were communicating with two other people. And as the person would come out of the bank, there was another person inside the bank watching. And as people would come out of the bank with money, they'd just rob them. And, sometimes they'd beat them, they'd kill them, they'd just steal the money. And so it creates a whole slew of new problems, as if the monetary system isn't enough of a problem.
Well, this gets to a bigger issue, which is that when you destroy the value of your currency, you change the culture in a fundamental way. Because all of a sudden what you're saying is borrowing money is good, saving money is bad. We're going to punish you if you play by the rules and save for the future. We're going to destroy you.
And we've been doing that ever since 1971 in the United States.
Absolutely.
So that's what I try and augur into people's head when they listen to my show, they come to my seminars. I say, look, all of the stuff that you have believed because your parents and your grandparents acted responsibly and they had the mentality of save for a rainy day, delay gratification, because that's what you should do so that you plan for your future. All of that stuff really since 1971 has gone out the window, because just in 30 years following 71, a dollar went from $1 to 24 cents. And the people that won the game on those 3 decades were the people that had commodities and things that had intrinsic value, and then people who were in debt, people who had long-term, low-interest, fixed-rate, investment-grade debt tied to those commodities. And what I mean there is owners of real estate, because their debt was just debased along with a dollar. Yet at the same time, all the people that did the seemingly right thing, that had savings accounts and even stock portfolios, they don't adjust for inflation very well, although they do a little bit in theory. But those things were attacked by inflation. And bonds certainly were attacked by inflation. They were destroyed.
And then when you see people who having their lives destroyed because they played by the rules, because they believed that the government was basically honest and that the system was set up in their favor, when they see that all turn out not to be true, it causes them to be willing to break any rule then after that. So the cultural norms that kept people in line and made for civilized society break down. So you get a rising crime at the street level at the same time that you get people more and more willing to vote for quote unquote strong leaders who are going to maybe put civil liberties off to the side for a while in order to maintain order. And so you end up getting dictatorships out of all this too. France destroyed its currency in the late 1700s and got Napoleon. Germany had a massive hyperinflation in the 1920s and got Hitler. And there are examples from throughout history of this happening over and over again. And so we're doing it worldwide right now. And so you are seeing the political system change in a really disturbing way. And for instance, in Greece now, the fascists are getting a lot of votes and the communists at the same time.
Oh my God. Scary stuff, huh?
Yeah. And so you see society break down at every level, all because we've destroyed the value of our currency. A currency is really the promise that if you save money now, if you delay gratification now, that the value that you've put away today will be the same 10 years from now or 20 years from now. You break that promise, you destroy everything. You really tear out the fabric of a society, and you get a place like Nazi Germany or post-revolutionary France. You get a place that seems crazy to us, but it's really a normal reaction of human nature to a system that has gone crazy in the first place.
Okay, so let's move on and let's talk a little bit about Japan. I mean, everybody has pretty much heard about Italy, Spain, Portugal, maybe Ireland, certainly Cyprus by now, although Cyprus is a very small country, but it's a great example of how, folks, you better be prepared. But move over to Japan, if you would. Let's head east and talk about Japan.
Yeah, Japan is not front page news today, but it will be soon. Basically, their story is that they had twin bubbles back in the 1980s, real estate and equities. Those bubbles burst in the early 1990s, and instead of allowing their banks to fail and then cleaning them up afterwards and getting rid of all that bad debt that had been created, the government chose to do kind of what we're doing today. They borrowed a lot of money and they financed the banks to keep them alive and the builders to keep them alive. So you ended up with all these zombie organizations that weren't really capable of giving an economy any growth, but also weren't causing it to fall into depression. And the government had to borrow more and more money each year to keep that system going, to the point where they owe more money at the sovereign level, at the national level, than any other country in the world as a percent of GDP. Japan is more indebted than Greece or the US or Spain or Italy or anybody. And they've been able to get away with this because their people were big savers and they were running a trade surplus. Now, those two things are done. Too many Japanese are retiring now and having to spend their savings, so their savings rate is down to zero. And they're running a trade deficit, so they don't have a lot of extra money coming in from, for instance, Americans buying Hondas and Toyotas to finance their overspending and borrowing. And so now they have to borrow on the open market. And there's a hedge fund manager named Kyle Bass who's been making this story really compellingly out there. And basically he says that if Japan has to just pay for its new borrowing what the US and Germany currently pays for ours, that their interest costs would exceed their entire tax revenue at the central government level. In other words, they would have nothing left over for anything. They would just be paying interest, which means their system would collapse. And that's coming in the next year or two. That's how close they are to this point, which is kind of a death spiral where they have to borrow more and more just to cover their interest, which means they have to pay more interest going forward because they had to borrow more, and you spin out of control. And Japan is not far from that.
I'm curious, though. I hung out with a guy recently in Belize when I was speaking at an offshore conference there a couple of weeks ago, and he was talking about shorting Japan's debt, shorting their bonds. Would you agree that that's the play?
Well, if it works out the way it looks like it's going to, Japanese debt is the short of the century. Now, the question is, how long can they keep it going?
That's always the question, and that's where people just die in all of these plans, is that you just never know when. What's the timing?
Yeah, and I mean, that's really the story with any investment thesis is you want to be there kind of when it's going to start happening, because if you have to wait 2 or 3 years for it to happen, you've got at least a big opportunity cost and maybe all kinds of interest costs and other things. And so whether today is the day to short Japanese bonds or next year is, I don't know. I wish I did. But at some point, let's say 10 years from now, we will look back and say, oh, that's one of the things we should have done.
Right, sure. But why did you say 2 years?
Well, that's Kyle Bass's calculation, basically, that as of now, they have to start borrowing on the international markets to finance themselves, or they have to have the central bank print new yen at a level that's big enough to just buy up all their debt, which would make the yen go down in value, which is bad for Japanese bonds. Either of those things is a bad deal from the point of view of somebody who's thinking about lending the money, which is basically what you're doing when you buy one of their bonds. And so it makes their bonds less valuable going forward and makes their bonds a good short. And that's happening now, according to Kyle Bass. Now, I'm old enough to have been wrong on timing a whole bunch of times in the past. And so things that seem like they should happen right away frequently don't happen for years and years. And so I'm gun shy based on too many overly early investment ideas that I've had. And so it's completely possible, based on my experience, that Japan chugs along for another few years, just kind of treading water and building up more debt and printing more yen, and it doesn't fall apart for a while. So again, whether it's this year or 3 years from now, when the best entry point appears, I have no idea. But eventually it's going to appear. Eventually Japanese bonds are going to be a great short, and the only question is when.
What happens after Japan? So the dominoes keep falling here.
Well, Japan is the third biggest economy in the world, and let them crater, and they will pull everything else down with them. So what will probably happen is that the other countries of the world will go to extreme lengths to keep Japan afloat, keep them from imploding. And the only way to do that is to print lots of new currency and use it to prop up whoever you're trying to prop up. So you're probably familiar with Jim Rickards' book, Currency Wars. And that's basically a blueprint for what's happening now. And the thesis of it is that when a country runs into financial trouble, when it borrows too much money, it eventually concludes that its only solution is to depreciate its currency. You make your currency go down in value, that makes your exports cheaper, you sell more stuff overseas, you have more money coming in, and that buys you some time. So right now, the three big debtor systems, the US, the Eurozone, and Japan, have all come to the conclusion that that's what we have to do. And so Japan is the most aggressive right now because they're in the most immediate trouble. They're aggressively inflating away the value of their currency. And that's going to force the other two big systems to do the same thing, because if the yen goes down, that's the same thing as saying the dollar goes up and we lose export sales because our currency is too strong. And so probably what we're going to see over the next few years is kind of a round robin deal where Japan, for instance, pushes down the value of the yen, and that forces the Eurozone or America to do the same thing. And so we all engage in a race to the bottom in the value of our currencies. We all push the value of our currencies down to the point where some kind of financial crisis occurs because everybody sees it happening and nobody wants to hold these paper currencies anymore. And that's really the reason dollarcollapse.com is named dollarcollapse.com, because that's out there somewhere. Some kind of currency crisis where everybody heads for the exits at once is the logical conclusion to a process where everybody's trying to push the value of their currencies down. And the question then becomes, does some big part of this war blow up first? Like, does Japan have the mother of all bond crises? And does that tip us from a currency war into a deflationary crash like the 1930s? Or do we keep it going for a long time and have mounting inflation to where the markets look like the 1970s, where interest rates go up to double-digit levels and gold and silver go up exponentially for a few years, and at the end all the currencies have been depreciated to the point where maybe we can go on from there, but a huge amount of damage has been done in the process. There's no way to know how this plays out specifically, but that it has to be extremely painful to get from here to some kind of sustainable system, because we have to work off this debt somehow.
Let me take a brief pause. We'll be back in just a minute.
What's great about the shows you'll find on jasonhartman.com is that if you want to learn more about investing in real estate in different markets, there's a show for that. If you want to learn 17 ways rich people think and act differently, there's a show for that. If you want to know how to get paid to borrow, there's a show for that. And if you'd like to know why Amsterdam doesn't take dollars or why pools are for fools, there are even shows for that. Yep, there's a show for just about anything. Only from jasonhartman.com, or type in Jason Hartman in the iTunes store.
What kind of opportunities do you see in all this? I mean, in all this bad news, there are a lot of people who will be enriched by it. I used to say I was an optimist. Now I say I'm an opportunist.
Yeah, you can be optimistic about certain investment plays within a system that you're pessimistic about.
Yeah, right, yeah.
And
that's exactly
where we are today. Crisis equals opportunities. And there are tons out there. Precious metals are kind of obvious in the sense that they are alternative currencies, alternative forms of money. So if we're destroying the paper currencies of the world, then historically, when that happens, money flows into gold and silver because governments can't create more gold and silver. So their supply is pretty limited, and therefore their value goes up relative to the paper currencies out there.
And I asked you before we started if it would be fair to call you a gold bug, and you said yes. And I'm curious, do you approach it mostly from the angle of storing wealth, saving money in these metals, and just the strictly financial side? Or if things, I mean, do you think things will really get bad? Is this do you have a survivalist bent to your thinking at all?
Well, I think the worst case scenario in this is pretty bad and kind of plays into the survivalist mindset. In other words, if we end up like Cyprus, where the government starts just confiscating bank accounts, and then we have civil unrest because of that, and a lot of the systems break down, and the food supply chain doesn't work like it used to, things like that at the really extreme end of the system or the spectrum of possibility would lead you to wish you had been a survivalist heading into it.
Right.
And I don't think that's necessarily the most likely possibility. I think there are lots of financial crisis scenarios that don't destroy the food supply chain, for instance. I think that
but they sure do make it a lot more expensive.
Oh yeah, totally. Well, they do that because the currency that you're buying your food with goes down in value. And so it gets harder and harder to live. Yeah, the basic necessities of life get harder to get.
And that's already been happening for many years.
Oh, absolutely. Yeah, it's no matter what the government tells you about inflation, it's a lot harder to live today than it was 30 years ago on a typical middle class income, and certainly on a lower on the wrong income.
But then there's the hedonics index. Oh wait, I can't eat my iPad.
That's right.
I can't eat my iPad. That's the moral of the story.
But this also plays into the whole cultural breakdown thing. When we realize that we're being lied to about stuff like unemployment and GDP growth and inflation, that's one more piece of the puzzle that we'll put together and come to the conclusion that we can't trust the government anymore, that the people in charge are not acting with our welfare at heart anymore.
Yeah, and you know what I say to that? Duh.
Yeah. But there was a time when the systems were more transparent, and you could in the 60s, leaving the Vietnam War out of the equation for a minute, you could look at a lot of things and kind of understand them and see why they were happening and understand the rationale that the government had for it. And now it's basically just lie after lie after lie. So it's gotten worse. It's harder and harder to trust the guys in charge, and that's because they've been borrowing more and more money, and they have fewer and fewer painless, honest options left to them. So their only choice is to lie and continue to lie and make bigger and bigger lies out of what used to be transparent public policy. And so the question is, what happens when we all catch on to it? And one thing that will happen is that money
we're catching on. I mean,
we are.
It is amazing to me, John, how just literally I would do a seminar or a keynote somewhere, and it would be 6 years ago, just 6 years ago, not that long. 6 years ago, maybe 7 years ago, 5 years ago, around there. And I would bring up the concepts about the Federal Reserve, a lot of these things that we've been talking about. And people just would sort of glaze over. But now, I mean, the common man is, and I credit Ron Paul a lot for this.
Yes.
The common man understands this stuff, or at least is curious about it. Whereas before, people just didn't even, it was a very small segment of the population. It was like 10% of the room would be nodding their head, and the 90% would say, no, I don't know, this is too abstract, it's too esoteric, what are you talking about? But now, everybody kind of gets it.
That is one of the upsides of this whole collapse scenario taking way longer than it seemed like it was going to, because it's given us time to educate ourselves. And so at the bottom, when things really fall apart, we'll have a more informed debate about what we want to rebuild from the rubble than we would have otherwise. If everything fell apart in 2000 with the tech stock collapse, I think the debate would have taken place at a really low level. It would have been really frustrating. And now it's 2015 or 2018 or whenever we have the debate about what to rebuild, it's going to be an intelligent debate. It still might not go the way you and I want it to go, but the people on the various sides will be reasonably well informed, and so we'll all kind of educate ourselves further as part of the process. So that at least is part of an optimistic scenario, and that's one of the few things that I think you can say that's positive about the past 10 years.
Yeah, it is, but I got to tell you, it's just really sad, and I think it's by design with the powers that be, the way people divide up along political parties, and this is G. Edward Griffin's been on the show a couple of times. Of course, you know who he is, Creature from Jekyll Island.
Yeah.
And he said, he put it so well, he said, Jason, it's like watching a wrestling match on television. It's staged staged. It's fake. These two sides of the aisles, it's largely fake. They're really part of the same big scheme. And today, one of my friends posted on his Facebook, and I just shared it on my own Facebook wall. And it's that picture that was floating around of a billboard, and I think it's somewhere in Texas. I don't know where it is. But it's a picture of George Bush waving, and it says, "Miss me yet." You've probably seen that. It's pretty cute and funny. But this one has that same picture with a caption at the bottom of the picture that says, it's got George Bush, "Miss me yet," and kind of a funny picture. And then the caption says, "Nope, we can hardly even tell you left."
Actually, that's a good point. The way you know that the same party is in control after every election is by following the money. For instance, when George Bush and the Republicans were in charge, government spending still went up, even though they were the party of small government. Obama and the Democrats take over, and defense spending continues to grow, and nothing really changes. We're still fighting the same number of wars overseas that we were. So Guantanamo Bay is still open. We're still conducting all kinds of covert military assassinations around the world using higher and higher technology. And so you really can't tell much of a difference between the Republicans who were in charge 8 years ago and the guys who are in charge now. And the reason for that is because there isn't that much difference. They both get most of their campaign financing from Wall Street and from the other big banks and the big corporations. And so they're beholden to the same people. So what that says is that there is no fix that's on the spectrum of politically possible. We will not stop what we're doing until we fall off a cliff. So we're just going to careen in the same direction, taking on more and more debt year after year, printing more and more dollars, increasing the amount of intrusion of the government into the lives of people, especially in their financial lives, but also in their personal lives.
Yeah. So let me give you a thought about that. I have a theory about this that I always like to ask my guests, such as yourself, and that is that it's the kick the can down the road question. All of this stuff mathematically, would say that, hey, the U.S. is on the verge of losing reserve currency status. The U.S. is on the verge of insolvency, or really you could argue it's insolvent already if we don't mine for our own great natural resources, which we have in abundance here. And we could be the energy leader of the planet, probably, if we would just exploit our own resources, without invading other countries. We don't need to do that, at least not for a long time. But the whole question is the U.S., because you mentioned Japan, we talked about Cyprus, we talked about Spain, Italy, Portugal, Ireland a little bit too, but the U.S. is in a really enviable position. I'm not saying it's right or fair, I'm just saying it's enviable for the U.S. because we do have reserve currency. We can probably bully our way around to keep reserve currency status for a heck of a long time, even though it's illogical, even though the other countries can see what our business plan is to inflate away our debt. That's our business plan, of course. So we get all this stuff from China. We get all the commodities, the things that have intrinsic value, the goods, and they get a bunch of paper that is losing value, that they can buy less and less of our stuff later with that paper. And we've got the biggest military, we've got the biggest economy. I don't see that stuff changing too much, at least not for a couple of decades.
Well, if you look at how Russia and China and Brazil and some of the other creditor nations are behaving out there, they're preparing for the transition. And what they're doing is they're buying more and more gold each year, which would allow them to back their currency with gold and suddenly have a strong currency. And they're liberalizing the trading rules that govern their currencies to make them more useful for international trade instead of just internal trade. But they're continuing at the same time to help prop up the U.S. to an extent by buying treasury bonds and by doing other things to allow us to keep running a trade deficit to keep buying their stuff because that keeps their factories running. And so they like this setup right now because it allows them to buy more and more gold and to go, China's buying oil wells and gas fields and gold mines all around the world right now with all the money that they're taking in. And so the longer this goes on, the stronger these countries are in relation to the old debtor countries like the US and Japan and Europe. So I agree that it's in everybody's perceived interest to keep this going for a while, but you can't violate the basic laws of economics forever. They can be bent, but they can't be broken. And at some point, our debts and the resulting interest costs that attach to them just become overwhelming. And I would say that based on just the numbers, not looking at how anybody's behaving in the world, that we're pretty close to it. Because if you add up all the debt, if you calculate debt correctly in the U.S. system, it comes to like $2 million per family of four already. And that's clearly an unmanageable amount of debt, and it will clearly cause us to blow up at some point. And I would have expected it to happen sooner, which means that I'm no kind of judge of short-term behavior of big financial systems. So it could go on for a lot longer than the numbers would say that it should go on. But, I'd be really surprised if we were like this 5 years from now, if everything was still the same. I think that it's much more likely something blows up, brings down the rest of the global financial system with it. It's just a question of what's the catalyst.
So here's the thing, though. The next part of my thesis is this. Look, I host another podcast called The Holistic Survival Show, and I interview survivalists, experts on whether it be, the tagline is protecting the people, places, and profits you care about in uncertain times. And it's my number 2 rated show. I mean, it's big. It's got a huge audience. And here's the thing, on a personal level, as it is on a national level, it's the same thing at the end of the day. In a survival situation, what matters is not really how much gold you have, it's how much military might you have. If the so-and-so hits the fan, if the crap hits the fan, what will matter most is who has the guns and the bullets, more than who has the gold and who owes interest to whom. And that's the thing that the U.S. has. It's got the military might to throw its weight around. And I'm not saying it's right to be a bully. I'm just saying it's the way of the world. It's the way of history. Whenever I turn on the History Channel on cable TV, it's all about war. That's what history is. History is just war. I mean, it's this war, that war. That's most of history is war.
Yeah, but it especially on the History Channel, I've noticed this lately too. A lot of it is about empires falling.
Yeah, well, sure.
So, but empires are very powerful before they fall. The Soviet Union had phenomenal military,
but not like the U.S.
Yeah, but in relative terms, though, pretty soon we're not going to want to fight China. Straight up, they're getting stronger all the time. That's another part of their strategy is building a blue sea navy, for instance.
I know, but they pale in comparison. I mean, America controls every ocean on Earth. I mean, I know that China's doing this stuff, but that's going to take a long time.
Well, before they're able to fight us even up all around the world, yes, but in the China Sea, for instance, they could dominate the China Sea very easily because, we could send a task force over there, but we've got other places we've got to have our military engaged. And if they put their entire navy, which is now growing and becoming more sophisticated all the time, in a small space near their coast, then they can do what they want to with Taiwan and Japan. And there's nothing we can do about it. And that day might be coming to where they decide that their sphere of influence is theirs and they kick us out.
Well, remember, we are their best customer. So I doubt that they're going to want to really alienate us.
See, that will coincide with them not needing us as a customer anymore. When they've accumulated enough energy assets around the world and they have enough gold in their treasury to be able to say, okay, we don't need to trade with you. We're not desperate for the American consumer anymore. We're going to have the yuan be a global reserve currency backed by gold, and we're going to trade with Europe or Latin America or Africa to make up the difference, and we just don't need you anymore, so go away. And that's, I think, part of their long-term strategy. And the question really is that a 2015 thing or a 2035 thing?
Well,
when does it happen?
Yeah, I see everything you're saying, and I just play devil's advocate on one more issue with you. And by the way, I appreciate you staying on so long because you're fascinating to talk to. But with that happening, that would be like a business saying, that would be like an entrepreneur saying, hey, I have enough business. I mean, nobody says that. You always want more business, right? Why wouldn't they want the American consumer? Granted, they're positioning themselves to be financially sound. They're doing a lot of the right things, and it's amazing that they're still considered a communist country, frankly. But that's sort of another subject. But why wouldn't they want more? they want more. They're going to want our business.
Well, part of the deal in the current system that's bad for China is that they have to take dollars in return for their stuff. And we're aggressively trying to make the dollar less and less valuable. So they still do have a big treasury bond balance, which for them will be a bad investment if we succeed in depreciating the dollar.
You are very right about that. And they know that that's coming. They know that it's happening already. It's a bad deal for them. But they suppress their currency too to make their exports more attractive. I mean, they've been accused of manipulating, not letting their currency float, which they should. I mean, over and over.
Oh, absolutely. The difference is that nobody else has to accumulate a portfolio of yuan denominated bonds just yet. So that nobody else is affected by their attempts to make the yuan a weaker currency. And so we have, through the deal that we've set up for the last 20 years, caused Japan and China and a lot of other countries, Saudi Arabia, for instance, to give us stuff in return for dollars which we're actively trying to make less valuable. So we're kind of trying to screw them over, at least at that level in that way. And they know it. And they're taking steps. They're using their dollars now to buy real assets.
Yeah, which is a good idea.
It
and
is.
On a personal level, that's what people should do too, which I know is the premise of your thinking.
Basically, yeah. I mean, it's if you could boil down the dollar collapse thesis to one sentence, it would be to move your finances away from dependence on dollars. Don't set up anything that gives you an income stream in a depreciating currency, because that's a bad deal.
Yep, you're right. You know what I say? Denominate your assets in things that have intrinsic value, and denominate your liabilities in fake fiat currencies that are depreciating in value. And so take on debt, as long as it's long-term fixed-rate debt, to buy assets. I mean, if I could do that with gold, I'd be buying up a lot more of it. You can't finance it that well.
Yeah. Well, what you can do, though, is you can borrow against your house. Like if you took out a 30-year mortgage on the house that was already paid off and then used the proceeds to buy gold, you would be making a leveraged bet that the world is going to continue to go in the direction that it's going. I think it would be a good bet, although I would not advise any of your listeners to do that, because it is a leveraged bet. It is a big risk. But the people who do that and are able to cover their mortgage payments for the next 10 years would probably end up really making out.
Right. And see, the thing I wish about that is if gold would just produce income, then you wouldn't be in a position where you could do that and you could use the income from the investment to pay the mortgage payment that you just refinanced on your house. And that would be an ultimate arbitrage.
That would be phenomenal.
But no one will rent my gold from me.
No. To add one more layer of risk, you can do that, though. If you buy a portfolio of high-quality mining companies that pay dividends, and the dividends in the aggregate are equal to, your mortgage will be like 3.5% right now, let's say. And so if you're getting 3.5% or 4% from your portfolio of mining stocks, then you've accomplished what you were talking about there. And then you have zero cash outflow, and you've made a leverage bet against the dollar and in favor of precious metals.
You're holding something that everybody in the world agrees is actually money rather than something called currency.
Yes.
Okay.
Yes.
So I agree with you there completely. The problem is let's pick the right junior mining stocks. Good luck with that one. You even say it yourself. It's impossible, right?
Yeah, and to do this you have to go with the big guys, because they're the ones who pay dividends, the big miners, and they have a lot of operational issues right now that have made them bad investments over the last few years. They've actually gone down in the aggregate while gold has in general gone up.
And you know what I fear with these mining companies is the mining companies around the world, as the crap hits the fan, I fear that more and more of them will be nationalized.
Yeah.
And more Hugo Chavez type mentality, that's just spreading around the world. I mean, what if you had a mining company in Cyprus? Do you think the government would be looking to snag that?
And that's a natural outgrowth of the stuff that's happening in Cyprus. If they will take your bank account, they would certainly take Newmont Mining's Nevada mine or something like that here, right? They wouldn't hesitate to do that. And so, when you invest in mining stocks, this is something that's crucial for people to understand, because a lot of people think that a gold mine is the same thing as owning gold, but it's not. You get more leverage. You can make more money if everything works out, but there are all kinds of things can go wrong with that business. And so you're investing, in other words, at that point, instead of saving. When you buy gold and silver, as we talked about before, you're saving money. You're taking money, you're putting it off to the side, and you're preserving wealth. If you invest in a gold mine, you're investing. You're hoping to make a lot more than you would have if you just set your cash off to the side.
You're taking a risk.
Yes.
You're taking a risk. But here's the other thing. Even if that business goes well, you have a whole new layer of risk. You have the risk of what I call intermediary party risk, and that's the people managing the deal. For example, you look at Larry Ellison, founder and CEO of Oracle. Okay, we've all heard of Oracle. 2000 to 2002, in 2 short years, Larry's personal take from that company was almost $1 billion. It was $781 million in 2 years. Mind-boggling. Yet at the same time, the shareholders lost 61% of their stock value in the same exact time period. And that's completely legal. The C-class and the board of directors, they just skim all the damn money off the top. And that's the problem. Even if the business does go well, if you get past that hurdle, which is a giant hurdle, right, then you've got the second hurdle of all the crookery that goes on above that between you and your money.
No, that's absolutely right. I mean, of course, that's
and it's
an
legal
issue for
crookery
stock investing in general. Yeah, and anytime you invest in a company, you're taking on the risk that not only won't the business do well because of external factors, but the guys in charge might pull some kind of a shady deal or just be incredibly incompetent. You're taking on all those risks, and so you need to be rewarded for that. So you need to be able to double your money in a relatively short amount of time in any kind of stock to make it worthwhile, and that's historically very hard to do, and it's even harder now than it used to be because of the long-term credit bubble. Stocks went up in value for a lot of years, for a lot of decades. And so now we need a few decades of underperformance in order to balance things out, which means, finding stocks that are going to double, very hard to do now.
Yeah, and just be careful. Did they go up in value or up in price? There's a big difference, as you know.
Yeah. Well, that's really what happened. We changed the measuring stick over the last 30 years by depreciating the dollar. So for the stock market to be about where it was 10 years ago, which is what it is today, means the real value of those stocks actually went down dramatically because the dollar that we're measuring them in, the dollars went down in value.
Yeah, and there's no question about it. The Dow has not hit any new highs. Not yet, because it would have to go, I think I calculated it, to 15,800 to be even with the prior high before the financial crisis.
Yeah.
So we're not there yet, and you turn on CNBC, oh, the ring in the bell, the Dow has hit a new high, record breaking. No, it's just in nominal dollars, not real dollars.
And if you calculate it in gold, it gets even more extreme because during the Depression, we were on the gold standard. And so stock prices were calculated in terms of gold. They went down by about 90%. Well, if you apply the same standard now, if you measure the stock market in terms of gold, you get about the same thing, a 90% decrease in the real value of the U.S. equity market. So we had a depression here that we didn't know about. We masked it by printing a lot of money, but we did that at a cost of taking on another $10 trillion worth of debt in order to hide the fact that financial assets were in a depression level market.
It's one thing after another. It's just nothing but a bunch of manipulations, and people have got to be educated so they understand it. Last thing for you, and I hope you have time for just one more concept here, and I want to ask you about this. I believe that if you're buying the metals, you should take possession of them, and at the same time, I want to say that I don't believe you should keep them in your house. My grandparents suffered a home invasion robbery. My dad was grandfather was a bit of a coin collector, and guys came in at gunpoint, tied them up, took everything. That could have turned out a lot worse than just being tied up, but it didn't, fortunately. But they lost it all. They stole everything. So I believe that keeping that stuff in your home is a real danger of a home invasion robbery. So do not do that. But if you do own it, and I'm not going to say where you should keep it, but you should keep it off-site, but you should take possession of it personally. And it amazes me that all of these people who are gold bugs and who say, we don't like paper assets, we like hard assets, we don't like fiat, we don't like currency, they will buy metals like gold and silver, and they will say, okay, store them in some vault in Jersey, which is an European little jurisdiction.
Gold money.
With very favorable laws, I guess, for offshore banking. Okay, I don't know if that's the right way to say it about Jersey, but whatever. Put it in Switzerland in a vault or something. Or as Peter Schiff, he was on the show, and he was recommending that my listeners buy gold in the Perth Mint in Australia. So it would be kept in Perth, And I suppose you could go visit it if you wanted to, but you accept a piece of paper in return for your dollars. And the thing that blows my mind about that, about not non-possession, non-physical possession investors, is that aren't they doing the same thing? They're just taking a piece of paper with a promise, fiat money, if you will, just like the dollar. I mean, look, I would sooner trust, and I don't trust the government at all, or not much. I trust them a little bit, but I'm losing trust for the government. But I would sooner trust the government to give me a piece of paper that says it has value than some private company. I don't know. If I'm crazy, please set me straight.
Well, I think the crucial point in any discussion about physical precious metals is the recognition that nothing is perfect. There is no 100% ironclad guaranteed solution to the physical precious metals storage question, because like as what happened with your grandparents, somebody puts a gun to your head or to your loved one's head. You're going to give them what you have. You just, and even if it's offshore, or I'm not offshore, but out of the house somewhere, you'll go get it. You have to, because you have to protect your loved ones no matter what. And on the other hand, as you said, if you store it in a vault in Switzerland or someplace like that, you've never seen it. If they stop taking your calls, that gold is gone.
And even if you do see it, how do you know it's really yours?
Yeah, exactly.
They could have had, if you go visit your gold in one of these vaults somewhere, you don't know that same gold hasn't been sold to 100 other people. That is exactly the definition of fractional reserve banking.
Exactly. Yes, absolutely. So I think the only solution with something like this is diversification. You spread it around. You store some at home. You store some in a safe deposit box. You store some overseas. You do 3 or 4 different things in the hope that two or three of them will work out in the end, and you accept that some of it is just going to be lost because that's the nature of your environment now. And I mean, you do that with any other kind of investing program too. If you buy 10 stocks, you're buying them on the assumption that 2 of them are going to go bankrupt and 2 of them are going to go up by 500%, and in the aggregate you're going to make 15% a year. And so it's the same thing with storing precious metals. You can't put all your eggs in one basket because no basket is 100% secure. And so there's a really active discussion about this online. There's all kinds of creative ways to store your gold. It's fun to listen to it.
What's interesting is I'm seeing a lot more of these private vaults. They're not safe deposit boxes at banks, but they're private vaults close to your home potentially. And it's not a vault where it's commingled. It's like you receive your valuables and you go put them in a safe deposit box that is off the grid. It's not reported. I don't know how the safe deposit box system works, but my assumption is that, of course, the bank knows you rent a safe deposit box from them. And, of course, if they close the bank and put a bank holiday like in Cyprus, you probably can't get access to your safe deposit box either. Or if some creditor comes after it, they can probably go in there and open it. I don't know, but, I'm just theorizing.
At this point, anything is possible.
Yeah,
safe
right.
deposit box is absolutely not ironclad guaranteed secure. So, yeah. There are a lot of different options out there, and the only
and Howard Ruff recommends the Midnight Gardener product. You bury it in your backyard.
in that case, you got to bury it deep enough so that somebody with a metal detector doesn't find it, and then you have to tell the right people about it.
Yeah, right.
So that the secret doesn't die with you. And so that's complicated too, because are you telling the right people, or are you creating an incentive for something you don't want to happen to you, but telling the wrong people?
Like another put a gun to your head robbery, exactly.
Yeah, or just can you trust your breakfast from then on?
Yeah, I know. Yeah, you're poisoning. Yeah.
Yeah. So
it's complicated.
Everything has a downside. It all requires some thought, and there's no alternative but to put the thought into it and to diversify wisely.
No question about it. Well, hey, give out your website. Tell people where they can buy the book and learn more.
Yeah, I run dollarcollapse.com, which is a blog/news aggregation site that covers all this stuff on a continuously updated basis. And you can pick up The Collapse of the Dollar and How to Profit from It at Amazon and pretty much any other big bookstore.
Fantastic. Well, John Rubino, thanks so much for the very interesting and intelligent conversation today. Really appreciate you staying on so long. I think the listeners got a lot of value out of it. I know I certainly did. So appreciate it.
Yeah, thanks, Jason. Enjoyed it.
This show is produced by the Hartman Media Company, all rights reserved. For distribution or publication rights and media interviews, please visit www.hartmanmedia.com. hartmanmedia.com or email media@hartmanmedia.com. Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, or business professional for individualized advice. Opinions of guests are their own, and the host is acting on behalf of Platinum Properties Investor Network, Inc. exclusively.